Hi, Dan Paladin, bringing you another episode of the Mortgage Morsel. On this episode, I wanted to talk about forbearance. Maybe you might not think it affects your purchase transaction, but it can. During COVID, while the banks are offering forbearance, the downside is that they won't be loanable with a property in forbearance. Doesn't have to be the subject. Refinance, of course, not gonna happen. But if they have an investment property that they put into forbearance and then they're looking to buy a new primary, they're not going to be loanable. So forbearance agreements are going to be a hindrance on transactions if they have any property under forbearance. Fannie and Freddie are not buying those. So depending on your loan category, and I'm sure Jumbo is going to follow the same deal. So something to be aware of because it could all of a sudden derail your purchase transaction if you find out there's a non-subject property under the forbearance agreement. So I just thought I'd pass that along. And yes, here at Armstrong, we're still lending, we're still closing. We've got new non-Q limits come back into play, bank statement, asset, and debt service ratio programs. So keep us in mind. We're still here for you. And that's it for this episode. And if you're working, I'm working. And I'll see you next time on the Mortgage Morsel.